We're back. Closed session on common option oversights with beginners will start now. This session will help you avoid common beginners trading mistakes. Claude is a trader, instructor, teacher, and previously a senior vice president at Montreal Exchange. Claude, up to you.
Thank you, Michel. Good to see you. Good to be here. People who know me know that I have the Montreal Exchange tattooed on my heart. That's where I started as an option market maker on the floor. And I ended up being as Michel said, a senior vice president of financial markets. So taking care of all the markets and everything. So it's just something in a place that I love and it's deep to my heart. And happy to be with you today to share common mistakes for beginners. And everybody sees my screen okay? Excellent. There you go. So first, I always like to start with my motto, which is basically process before profit and risk before reward. I'm a professional trader nowadays and an instructor. And to me, trading is about a process. And Chris alluded to it early in this session when he talked, and same thing with Patrick. What he's talking about is repeating and repeating the selling. And over time, that's how you make money. Trading is a process and it's a learned process. And it's very important to focus on that and not on the profit. Same thing on the risk side. You want to focus on the risk that you're taking, not on the rewards. Professional trader end up making money, not because they focus so much on the reward, but because they manage their risk. And what we'll see today is mistakes that people do and that are actually caused by the fact that they're humans. And so what the easiest way to get over that is to understand those biases that our brain has. And it's basically, once you learn them, like a professional trader, the main difference between a professional and an amateur is the professional actually knows how the brain thinks and the bad things that can happen if he just follow his guts. Following your guts is a big mistake in trading. So we'll see two aspects. So first, the psychological aspect. I'll start with that. Then I'll see common mistakes. So that what's human nature? This is it. This is the real human nature. This is us in a chart. And I love this chart. I know all you guys saw that before. But I'd love to bring it back and back because I'll take that chart and I'll put it over all the bubble, like be it 2000, 1987 is a bad example, but the tulip bubble, the South Sea bubble, the 1927, 1937, all of them, it's always the same thing that keeps repeating itself. And this is this fact that the market starts going up and then the public get involved totally at the end. And now we think we're in a new era. And then there's a correction. And often that correction is not very good. So where are we in this? I don't know. We're obviously somewhere here. When is that going to happen? I don't know, but I know it will because it's been happening. So this chart, I can put 26 in a row and would basically explain everything since 1880, sorry, which is most of the data we have on stock market. So it's something that keeps repeating itself. So how do you avoid doing that? It's by understanding human nature. So Daniel Crosby in his great book, The Behavioral Investor, wrote this: your brain is outdated, impatient, and hungry. So outdated, why? Because it was formed about 40,000 years ago, and it has not really evolved ever since. It actually has contracted a lot since we discovered agriculture. We became sedentary and we became one-trick monkeys, right? Sorry about that. To teach you that if you don't know that, but we basically our brain started shrinking when we became one-trick monkeys. It is impatient because it likes to save energy. It's hungry. It uses 25% of our energy comes from the brain, the usage of the brain. So what they'll do as soon as it can is going to jump to conclusion, even if that conclusion is wrong. So most of you probably saw that. It comes from a book called Thinking Fast and Slow by Daniel Kahneman. Great book. Michael Lewis wrote a great book about Daniel Kahneman, by the way, and his partner Tversky, a must read for those who love this stuff. So you have a bat and a baseball that are worth $1.10 together. You know the bat is worth $1 more than the ball. How much is the ball? Simple math, right? Well, hopefully some of you have answered 5 cents because that's the answer. But most of you probably said 10 cents, and don't blame yourself. That's how people respond. So why do we say that? So $1.10, one plus the other, so it's a 10 cents makes tens plus $1 is $1.10. But no, it doesn't work this way. I said $1 more, so it's $1.05 plus 5 cents is $1.10. What's really striking about this is that we don't take the time to verify our answer. That's how the brain takes shortcut. Like, it's unbelievable and it's almost unacceptable. So what are the implications of this? Well, humans make very poor trader. Let that be said. Our decision making is extremely bad. If we don't follow certain rules, we're doomed to lose money. So first thing we do is we tend to cut our profit short. So as soon as we make money, we take it, and then we let our loss runs forever. And you all know the story. The stock that was a something you wanted to trade and you wanted to buy and hold it for a while, for a short period of time, like a 2-3 day thing, end up you only own it for 20 years. So we all heard those stories. The second thing, and that's a little more complicated, we try to maximize the number of times we are right as opposed to maximizing returns. Okay, let me repeat that. We try to maximize the amount of times we are right as opposed to maximizing returns. That means that it's even more important for your brain to know that you did the right thing because you made money, no matter how much money you made and how much risk you've taken. So a good example, and that's what makes credit call so credit call and put spread so interesting. So credit call and the put spread are a system that a lot of people sell that is questionable. So it's the type of thing where, all the system that you see that they promise 95% chance of being right. Well, these are the one. And what you do is they're right. You will be right 95% of the time. But the 95% of the time, you're going to make 25 cents. And the 5% of the time you're going to be wrong, you're going to lose $10. And so at the end of the day, you won't be making any money. And these systems, by the way, are by far the most expensive because the people who sell them use, let's say, a weakness of the brain that says, I want to be right often. I don't care about making money. That's your brain. That's not, I know when I said to you, I'm not like that. Yes, we all are. We love taking a profit, even though it's a small one and the risk you took on the other side made no sense. So these systems become very attractive, especially to people who are not aware of that. So that's why we need to learn about that. The covered call, as an exchange executive, the first thing we used to do is sell covered call. It's a great strategy. Don't get me wrong, but it makes it very attractive because it increases the probability of us being right. But it doesn't necessarily maximize return. But don't get me wrong, I sell covered call. It's not a bad strategy, but it's not the strategy and option. But it makes it attractive. So an exchange executive, we sell those at the beginning, and then we get people to do other stuff. And our brain have this thing about breaking even. Like, we're crazy about the concept of breaking even. Why? I don't know. So you buy a stock at $20, it goes down to 10, and then you keep it, and somebody says, well, maybe you should take that money and buy this other thing that's keep going up. It says, no, yeah, it's a good idea. I'll do that as soon as I break even. Why? Why do we have this thing? It's just a human bias. We don't want to take a loss. We don't want to be wrong. But it's right. It's wrong. You should, like a job of a trader. We all think we're glorified on the phone, Gordon Gecko in Wall Street making incredible trades. It's not like that. We do a zillion trades, and more than half a zillion, most of the times, are losers. So my job is to take losses and let my profit run. So what's the solution to this? Is trading is about knowledge. So what you guys are doing today is incredible, and what the exchange is doing by offering you such a service is great. It's money well spent for everyone. You need to learn about these human biases, and this way, knowing yourself, and then once you know yourself, it's going to be much more easier to go through the process of trading, to understand what the process of trading is. And most of your trading should be rule based in a way. So you need the repeating the thing, as everybody alluded to, is you repeat it in a very organized manner, if you want. And in a diversified portfolio, like that section that is covered call, well, that section, you just keep doing it. And you don't go, this week I won't do it because somebody said something on CNBC. It doesn't work that way. So what are the common mistakes that beginners do? I'll start with the most important one. And again, Chris alluded to it. It's a big one. So here's a question for you. I borrow $100 from you at 4% interest per day. How much money do I owe you after 30 days, 60 days, 120 days, and 360 days? 65, sorry. So 30 days, you can figure it out pretty easy. 60 days, it's going to be a lot harder. 120 days, you're going to come up with a number, but it's probably not going to be close. And these answers are 324, 1,051, and 11,066. And I'm sure you saw that I've been using this in videos because it's so important to understand. Can anybody guess what is 365 days? So take a second, pick a number, like just say a number in your head. Now take that number and multiply it by 5, and I'll bet you won't even be close. The answer is 164 million. Okay, 4% interest a day on $100 after a year is 164 million. Why is this so important to learn? Why am I spending time in an option presentation talking to you about that? Because everybody's trying to make it overnight. All the kids, and what's really, really, really bad about what we just lived in the past few years is a lot of the kids made it big overnight. And their expectation now is going to be that it's always going to be like that. A lot of people started trading in 2020, and 2020 is an exceptional year. Let's face it, like market went up 60% from the bottom. Bitcoin went up 1,700%, something like that. So very hard to repeat. And we all hope as traders, we hope it be like that all the time, but it's not. So one of the problems by trying to wanted to make it big overnight, we lose the focus on risk, and we focus on the profit potential. But it's so wrong. It's think risk first, and then the profit will take care of themselves. That's what we like to say. So investing is not a marathon. It is a marathon, sorry. It's not a sprint. So it's a long process. It takes time. But you see those little 4% of the day, they add up. At the end, it's a lot of money. But it's not from $100 to 164 million. It's from $100 to 104 to 100 and whatever, 8 and 16 cents or whatever it is. And why is that? Because if you are wrong and you lose money, this is how much money you need to make if you lose 40% of your capital. So we saw that last year, right? So let's say 30%. A lot of people lost 30% of their capital. Well, you needed 42% to make it back. Well, we got it last year. It's not always like that, right? So if you lose 100% of your capital, you're out of the game. As a trader, I can't do that. So it's like I got this capital that I have to trade now, and that's how I make my living. So I can't afford to lose basically almost, I wouldn't say none of it, but losing 30% of my capital is not an option. It's not something I can live with. So I have to focus on the risk, and the profit take care of themselves. So what is the solution? Again, trading is about knowledge. So first of all, learn to size your trade. So, um, and that means learn money management. There are rules out there that are very strict, that are very, and we don't need to make big research on that. We have all the people in finance are so generous with their information. Look at what we're doing today is sharing knowledge, and so we all know what most of the large trader told us how much risk they take, and they will repeat that. So the rule of thumb is basically never risk more than 1% of your capital in a portfolio. 1% of your portfolio, sorry, on one trade. So that means, that doesn't mean if you have 100,000, you buy, $1,000 worth of stocks. That means you won't lose more than $1,000 on that trade. And then the learning money management also involve learning how to take a profit. And that's they call it the popcorn trade. How many times you bought something that went up like this, and you were making all this money, you almost spent it. Bah, not to say you probably spent it, and then it came back down. So very, very, very dangerous process. So you need to learn how to take profit as well, and obviously how to take a loss. As I said, as a trader, your number one job is to take a loss. When you're wrong, you're wrong. Just get out. um, we also, as I said earlier, skip important steps. And now that you know that, don't blame your brain. Just go to the process and learn those. So by skipping step, I mean, take the time to learn the platform you're using. Very important. Those little mistakes that we do are costly, and they add up. Again, the fees and all the costs and all the mistakes, they're like compound interest. They work both ways, right? So they add up, and then they become a lot of money. Don't be afraid to trade in a simulation environment. The In a simulation environment, first you will learn your platform. You will learn that you do mistake. You will also learn that I'll keep it for another day, and then the other day is the one that costs you, that makes it go down so hard. Um, Also take the time to learn option properly. And by this, I don't mean to say that you need to be an expert on Greek. But for example, if you are selling weekly options, you got to understand that what you're selling is actually gamma. And you have to understand what gamma would do to you if it goes against you. And so you need to really consider, why am I selling this? And so it's very hard to do some of the trades without knowing some of the Greek. So don't care about Vega, but do know about gamma if you're selling short-term options. Take the time to write your trading plan. So this is so important. So everybody should have. So in my trading plan, I got everything from the hours that I work and stuff like that. But also, what am I using? What product in what situation? Because as Patrick alluded to, I have a portfolio. And in my case, it's actually a quite complex portfolio. And in there, there's a section that is trading. But the rest also have to apply the system and just repeat it. So having a clear plan makes it so much easier. Writing a trading journal, you're going to increase the time it takes you to learn how to trade by a zillion hours just by writing what you do, how you feel psychologically, because this is what we're trying to beat, is the human brain. And take the time to plan each trade and trade the plan. So first thing we learn in the market, plan the trade and trade the plan. And there's a lot of information here. This is the most important one. Well, but starting with writing a trading plan. If you were to open a shop you would know, you would actually have all this information in hand. Same thing with trading. Like, it's money. Like, don't play with money. It's not a joke. It's real money. It's your patrimoine. We say, I like to say in French, is a great word to explain it. It's what you own. It's what you leave to your kids and to your family. Other specific problem that are more specific to options. It's hard to put a stop on options. Um, so that gives us a tendency to trade out of the money only. Um, and with that, I'm saying, if I don't want to lose more than $500 on a trade, I'm going to try to buy this option out of the money in a quantity that equals $500. Therefore, I'm guaranteed not to lose more than $500, which is great. But if you look at professional trader, they have a tendency to buy, most of them, 70 delta options all the time. And so, but then you can, if it's only $500, you can only buy a few or not even have enough money. So how do you do that? Well, you need to put a stop on the options. So I haven't really figured out how to do that, tell you the truth. And it's an important one. If I put a stop and on the underlying, and then it sells the option, some platform allows to do that. So that's good. The other thing, we tend to keep low probability options as lottery ticket. Each dollar comes. So it's worth $50, get rid of it. We use only one option strategy. So either speculation or income, whatever works for us, we tend to do that and keep doing it. Well, covered right is a great strategy, but it cannot be your only strategy. So you have to adapt your strategy to the market, to your portfolio that you're trading, the reason you're doing it. And also, we have the recency bias that tells us that it worked the last time, it's going to keep working. Not necessarily. We tend to buy, again, coming back on the subject of buying cheap out of the money option. A slightly in the money option or a spread is a much higher probability trade. And the MX offers you option play. By the way, if you go on the website, you can actually use option play. I'm sure Tony will talk about it today, but you'll see they'll put probability on it of success. And buying a calendar, a vertical spread, for example, if you're bullish on a stock, it is a great way to approach option, and much safer and a higher probability trade. But that's not what our brain will tell us. Well, we're going to buy the lottery ticket out of the money, lots of upside if you're right, but there's a good chance you're not, and then you're going to lose all that money. The options are not well understood in certain type. For example, a lot of people think you need a lot of money to trade options. Well, not necessarily. And the opposite, if you only have a very small account and you can't afford to lose anything, well, with options, you can actually decide at the beginning how much money you're going to lose exactly. The other one, we saw that today. You can only trade option and margin account. Not the case. We saw that you can trade in registered account. You're limited in the type of trades you can do, but you can still do that. And options are too dangerous for me. Well, depends on how much you know about options. Just spend the time learning it. Don't take shortcuts. It's not rocket science. It's not that complicated, but there's a minimum to know. Final advice, don't go at it alone. And that's what you're doing today. So the option education days for the Montreal Exchange, great source of information. You met some great people, a service like Patrick, a system like Pascal presented earlier from Innovesta, meetups. There's option meetups a bit everywhere. I run one. I'm based here in Calgary. So I run one in Calgary, and I have people presenting, showing what they do, and it's great. So last thing is, don't go for the service that's going to tell you what to do. And that's our tendency. Spend the time learning it, because we all have our own way of approaching the market. And it's very important that we use it. We trade in a way that fits our personality. In my head, it's one of the only way you're going to make money. So take the time to learn. Don't go with someone who's going to tell you exactly what to do. And finally, my contacts. If you have any question, I see a lot of question, and just and I'm done, Michel. Just to talk about the Prosperity Club. It's a first thing you need to know. It's in French, so all the people that wish they had an option education day in French today, Prosperity Club is in French, and that's a place where you can come and learn how to be prosperous, learn how to use the market. But more than that, it's also crypto, it's also real estate, it's whatever it takes to become prosper in the world. And so it's a private club, and I see all the question that we had today. Well, there's the same thing where people ask question, and there's professional like me who answer those questions. So this is basically it. And I hope you enjoyed the time I spent with you. Overrun by 2 minutes only, Michel.
Just two. Well, those are good points, Claude. Thanks for yet another great session.